for a limited time, $1 gets you full access to all the automotive industry news and content CBTnews.com has to offer. CBT News. Subscribe today. Welcome to CBT News with Bridget Fitzpatrick.
Good morning, everyone. Welcome back to CBT News. I'm Bridget Fitzpatrick. Thank you so much for joining us. Today on Inside Automotive, we're joined by George Corollas, president of the Presidio Group, and Jason Stein, former publisher of Automotive News. But first, here are today's top stories. Starting off our coverage, Kelley Blue Book has named the brands and models with the best resale values in 2023, ranking Toyota best overall and Lexus as the best in luxury. Top models include the Chevrolet Corvette, Ford Bronco, Honda Civic, and Jeep Wrangler. Kelley Blue Book has recognized Toyota for the resale values 7 times since it began awarding the title in 2002, with 2023 being the automaker's second consecutive year at the top of the list. After making significant price cuts across its lineup in January, Tesla has further reduced prices for the Model S hatchback and Model X SUV. The cuts range from 4% to 9% on the two models, depending on the version and trim. After missing its delivery target for Q4, the brand dropped prices for the Model S and Model X, its two most expensive products, by 10% and 9% respectively. During last week's Investor Day, CEO Elon Musk noted that lowering prices had caused demand to surge in early 2023. Up next, a new report claims that Rivian is internally hoping to build an additional 12,000 vehicles in 2023, significantly higher than it predicted in its yearly outlook published last week. Officially, the automaker maintains that it will build 50,000 units before next January, roughly 17% below analyst predictions. However, anonymous sources at the company told reporters at Bloomberg that Rivian executives have secretly expressed to employees that they believe 62,000 is achievable. In 2022, the EV startup built roughly 25,000 EVs, narrowly missing its adjusted forecast. Wrapping up, EV startup Lordstown Motors reported a total of $220 million in cash reserves after delivering only 6 vehicles in 2022. The brand was forced to halt production of its inaugural Endurance electric truck in February after discovering an issue which could cut power to the motor. Now, by the end of March, Lordstown expects to have spent $40 million to $70 million of its reserves, but may receive conditional funding from Taiwanese manufacturer Foxconn, with which it is building a new EV platform. Don't go anywhere. Coming up next is George Corollas, president of Presidio Group, and Jason Stein, former publisher of Automotive News. We'll be right back.
Delivering the news dealers count on for 10 years. Subscribe today and join thousands of other automotive professionals. CBT News, 10 years strong.
In the studio today, we're joined by George Corollas, president of the Presidio Group, and Jason Stein, former publisher of Automotive News and host of Full Throttle, a Presidio podcast. Check it out.
The M&A activity was crazy in 2020, 2021, 2022. Let's just go back to 2022 and talk a little bit about it. I'd love to get your take on what that looked like. What was the landscape? What were some of the takeaways from 2022 with regard to some of the M&A activity that we saw?
Sure. Yeah. Look, 21 was a record year, of course, and off the charts, fueled by the lowest interest rates of all time, and pent up demand in the auto industry, and really cheap cost of capital, and just really a great performance by dealers because of all those factors. And so that fueled a lot of exuberance in the M&A space. 22 started off real strong, tailed off a little bit because of all the geopolitical issues we face, as well as rising rates and inflationary pressures.
Sure.
I think the publics were under a little more pressure in terms of activity because of some of that, and we just saw some deal activity tail off, in particular on the public side. Again, a majority of the transactions that have happened historically are private to private. The public's been quite active the last few years, and of course, with some of the larger transactions in the industry, Park Place deal that we kind of we did in 2020 and kicked off large deal season there, right?
With Asbury, that was huge.
That's right. That was groundbreaking, and of course Suburban of Michigan that we did in 2021. Some of the larger transactions in the industry that the publics were able to get done, and they remain acquisitive, just a little different environment.
Sure.
Tailwinds kind of kicked in. Headwinds kicked in middle of 22 and slowed that pace down some. But we're seeing still unprecedented demand for dealerships by buyers.
Yeah.
We're seeing our pipeline's pretty robust, and we're expecting activity to remain real high and robust activity. I think we'll see some choppiness in terms of deals getting done because there's some different expectations out there between sellers and buyers.
Right.
What we call a bid-ask spread. And that's got to kind of come back, kind of like the housing market. So that's got to come back to a little bit normal. The rational sellers, we say, will get deals done. Those that are irrational may take longer or may not get done. But we expect activity to be robust this year and well into the future.
Cool.
It's kind of a binary market, isn't it? I mean, in the last 2 years, you were either a buyer or you were a seller.
That's right.
But there was nobody in between.
Yeah.
And I think that's probably one of the biggest differences, right, George? When you look at over the course of the last 24 months. You were in one camp, you're 1 foot in one camp, 1 foot in the other because of how hot the market was.
Right.
But I think there's going to be a settling out, right? I mean, when you look at the cost of capital and what it's going to take to really invest in these stores for the future and the amount of technology that's needed, particularly with EVs, which I know we're going to talk about, you're either in this game or you're not in this game.
Right.
And so the shakeout, I think, will still occur in 2023 and probably into next year.
All right, be sure to watch this interview in its entirety right here at cbtnews.com. That wraps up our show for today, but we invite you to join us back here again tomorrow morning for all the latest news and trends impacting the retail automotive industry. And of course, be sure to follow us on TikTok, LinkedIn, Facebook, and Twitter. I'm Bridget Fitzpatrick. Thanks for watching, and have a great day.
CBT News, your #1 resource for auto industry news and content. Join the #1 most watched newscast in the automotive industry. CBT News. Subscribe today.